Wall Street just split right down the middle today, and the divide tells you everything about where the smart money is flowing. If you're not paying attention to this rotation, you could be on the wrong side of a very big move. Let's break it down. The Nasdaq absolutely ripped today, up 1.2%. That is a monster session. The S&P 500 rode its coattails, climbing over 0.5% to close at 7,444. But here's where it gets interesting. The Dow, it actually finished in the red, down 14 basis points, barely below the waterline, but red is red. So what's going on? Why are tech and growth names surging while the old guard industrials are treading water? 2 words: artificial intelligence. Cisco just blew the doors off earnings. The stock popped 11% in a single session. And it wasn't just a beat. It was the guidance that had traders salivating. Cisco's AI infrastructure story is finally clicking with Wall Street, and the market rewarded it instantly. Communication services and tech were the leading sectors today, and they dragged the broader indexes higher almost by themselves. Then there's Plug Power, up nearly 12%. The hydrogen and clean energy name caught a massive bid. When speculative growth stocks start flying like that, it tells you risk appetite is alive and well. But here's the kicker. Not everything is sunshine. The 10-year Treasury Yield climbed to 4.48%. That's a meaningful jump. Producer prices came in hot, hotter than the market wanted. That's inflation data whispering in the Fed's ear, saying, not so fast on those rate cuts. And yet tech stocks shrugged it off. Think about it. Rising yields usually punish growth stocks. Today they didn't care. That tells you the AI narrative is so powerful right now, it's overriding the bond market's warning signals. Now zoom out for a second. The yield curve spread between the 10-year and the 2-year sits at 48 basis points. That's normal. No recession alarm bells there. Unemployment is at 4.3%, elevated but stable, and market sentiment sitting at about 66 out of 100. That's solidly in greed territory. Not euphoria, not panic, just confident greed. So what should you actually watch next? Retail sales data drops today. That number is going to tell us whether the American consumer is still spending or starting to crack under pressure. If retail sales come in strong, expect this tech rally to have legs. If they disappoint, that hot inflation print suddenly becomes a much bigger problem, because the Fed would be stuck between a slowing economy and sticky prices. Also keep your eye on geopolitics. Vice President Vance signaled that the U.S. is making progress in Iran negotiations. If those talks lead to a breakthrough, energy markets could shift dramatically, and that ripples through everything. So what's the bottom line? The market is telling you a very clear story right now. Money is chasing innovation, AI infrastructure, clean energy, growth. The Dow's flat performance proves that just being big isn't enough anymore. You need a narrative, you need momentum. But don't get complacent. Rising yields and hot inflation data are the cracks in the armor. One bad data print could flip this script overnight. If this breakdown helped you see the market more clearly, smash that subscribe button so you never miss the signal in the noise.